Hey there, everybody. My name is Leigh Middleton. I'm a realtor with New Homes Alberta and also the market strategist and chartered investment manager. And I'm going to be running through the Calgary economic update. Right now it's April 2024, and we'll be given a bit of an outlook for the rest of the year and go over a bit of data from the first quarter of this year. So the first thing here, you'll see overall prices continued to increase on a year-over-year basis, and months of supply decreased along with inventories. So lots of demand, inventories, and supply remained low. So that's how the prices ended up increasing again. We remain in the seller's market, so you'll see the months of supply is 0.95. So a lot of homes, whether it's new construction or resale, is moving very, very fast here. So it's important to know if you're a buyer, whether you're investing or buying for yourself, you have everything ready to go. Your financing, everything you're going to need, just because the properties here are moving so fast right now. Row townhouses and apartments remain the big gainers as buyers are looking for affordability and properties that are going to be rentable. So the sales and price growth remains strong with sustained demand. So apartment and detached will be projected to make a bulk of the home sales for the year. And this will likely remain dependent on affordability and interest rates as the year progresses. But as you can see, the demand is forecasted to be there as Calgary remains a strong performer here. Next, we'll look at ahead to 2024. Migration is expected to slow, but remain robust enough to sustain relatively strong sales in the market. So Calgary saw a pretty significant increase in population growth as people came here from other provinces. It's a little more affordable here, less tax, a little bit sunnier in Calgary, which is a nice part of living in the city here. And you have the mountains close by, so it's got a lot of nice attractors to it. And so we saw a boom in that, and then we're going to see that return to normal, but we're still going to see healthy population growth, which is a good tailwind for long-term price appreciation and rental demand. So robust employment growth has come from professional, scientific, and tech sectors on top of the energy sector. So a lot of diversity here in Calgary. A lot of people think it's just oil and gas town, but over the last 10, 20 years, we've seen a lot of growth in other industries and professions. So that's been very nice to have and adds diversity to the type of employment depending on the economic cycle that's going on. So Calgary remains pretty resilient that way. Forecasted sustained growth will be a long-term tailwind for real estate prices, so that's good to know as a buyer or an investor. There is no forecast for substantial job loss or increase in unemployment with current labor dynamics in Alberta. A lot of talk about recession. What I'd suspect to see in Calgary during a recession is we'd be kind of the last to go into it and the first to come out compared to the rest of Canada, just because we have so much economic prosperity here, low taxes, attracts a lot of businesses, entrepreneurs, that kind of thing. And obviously that kind of growth attracts employees and labor to the market. So it's always going to be a hot spot, just the way the cost of living is so much lower here. Alberta is expected to outperform most other provinces primarily due to the resilience of the energy sector and other high demand employment sectors moving to Calgary. So we see a lot of headquarters moving to the city here. Big development is happening in Calgary with a new hockey arena and arts and culture district. So there's a lot of new expansion coming to the city, which is just going to attract more growth in the long term. Oil demand is expected as well to remain modest, with long-term projections for the energy sector remaining strong with global growth forecasts. So as the world gets bigger, countries need more, developing countries are building more. The overall demand globally for oil and natural gas products increases, and we see that as a tailwind as Canada has a lot of affordable, reliable, and cleaner energy than what's available in the rest of the world. So We'll see that as a tailwind in Alberta, and Alberta being a huge benefactor to that. This forecast chart is slightly out of date, so that headline is accurate, but the little chart on the bottom right is slightly out of date. I think that one shows there's 4 cuts, but there's actually 3 cuts, rate cuts as far as interest rates are concerned that are currently forecast by markets and economists by the end of 2024. This originally was expected to be 6 or 7 at the end of 2023. So the amount of rate cuts that the market has expected and anticipated has been cut in half essentially in the last 3 months. So we'll see what happens. If they do cut 3 times, that would be about 75 basis points in cuts there. And that would be by the end of 2024 is the current projection. It's really a matter of when they cut rates. It's not really worth guessing because the central banks, when they see a need to cut, that typically means there's slowing economic growth. And when they cut, they need to see certain data in unemployment or just negative GDP growth or something like that. So we'll have to wait and see when they decide to cut. But from what they've been saying, even the central banks in the US and Canada expect 3 cuts. So we'll see what happens with that. Rental construction growth highlights the demand for rental properties. So this is pretty notable if you're an investor or buying it for yourself for price appreciation, is that the rental demand remains strong as people come here. Renting in some cases a little more affordable for people before they commit to buying, especially. So there's going to be sustained rental demand with the labor dynamics, a lot of people coming to the city, and that's positive for price appreciation. And we have Edmonton side by side with Calgary here, so a little Battle of Alberta going on. And I just wanted to highlight the difference in what we're seeing price-wise. So we're seeing price increases still in Calgary and slight decreases in Edmonton. Edmonton, I would say, is more normalizing. So it's more of a balanced market. But you'll see both cities are seeing decreases in inventory and new listings. And the months of supply are pretty low in Calgary, and Edmonton has a bit more at 3.4 months of supply. So just wanted to show a side by side there. Both cities in the province remain strong, and Calgary's still the hottest market in the country. Markets like Toronto and Vancouver are seeing prices normalize, while Calgary homes remain in an upward trend with attractive affordability. And that's important because not only are home prices more affordable in Calgary compared to other parts of the country, but the prices are a little more stable. So we see a little bit less volatility in the prices, and overall that's led to nice stable appreciation in home prices, which is good for an investor and a buyer. Fees and taxes are also much lower on your purchase of a new pre-construction home in Alberta, which makes it even more attractive as those other markets, price a lot of investors and buyers out. So this highlights Calgary's lower price volatility, and it's a bit more steady and robust relative to Toronto and Vancouver. And that kind of goes back to that economic resilience that Alberta has. So yeah, one thing to note as well, if you are looking to buy, it's important to have everything ready to go. Like I said, the market's moving pretty fast here right now. So you need to be ready to go and maybe miss out on an offer or two because, with the market supply so low and inventory so low, a lot of demand, the buyers are, making the market nice and hot. So be ready to go. And if you have any questions or anything, we're always happy to help you here and answer any questions that you might have.